there has been no time in the last 100 years where if the Fed raises rates too much, they will bankrupt the United States government. And there's nothing more bullish for gold and for Bitcoin than the moment when markets go, oh my God, they can't raise rates more because the only way to pay the interest is if the Fed prints it.
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having an awesome day today. Now, Bitcoin right here, you can see we, came all the way up to about that 28,005 and we did fall down. So what's going on here? So Hong Kong gets the green light to trade crypto and everybody decides to short it. Actually, I don't know what's going on right now, but that could be a possibility, guys. Although remember that we did say that we were looking to have a little bit of a pullback, but like my buddy Kevin Svensson says, we're still in a parabolic uptrend. So I'm actually going to push the TA to the end of the video today because I have to make today's video short, but I wanted to talk about something that I read, an article, and a few other things. Obviously we're seeing these other countries leaping ahead, progressing in the Web3 space and crypto space, and the US clearly falling behind with lack of clear regulation and enforcement, really just by aggressiveness, not letting people know what they've done wrong, sending Wells notices, fining people, right? However, there is something unexpected that could potentially be happening for the US right now, and it's a bit shocking. It's even a bit scary, but it may actually be something really beneficial for Bitcoin and crypto as a whole. And I wanted to share that with you guys because not a lot of people are talking about that. So we're going to talk about all that today. If that sounds good to you, TA at the end of the video. And before we do, craziest story. I don't even understand this, but this guy, Pauly0x, he literally just yesterday, I don't even follow this guy. I'm not even sure who he is. He just posted, send ETH here. And he just posted an address and then literally said, you get nothing. So this got 1.5 million views. And in the just 24 hours, people have literally sent this guy. They're still sending him ETH, 626 ETH. So this guy literally made $1.16 million just by randomly saying, send ETH here. So maybe I dropped my wallet below, guys, maybe. This is crazy. So I just wanted to put this out. I mean, I guess this guy's a millionaire now. I don't know why people are sending him money still. It's funny. So anyway, that was just crazy story of the day. So this is going to lead into what I was going to talk about super quick. So we're seeing over in places like Dubai and the UAE, you can see that they've had their central banks issue AML/CFT guidance for crypto. Now, this may seem negative on the surface, but we'll get to this. Just stick with me here. The central bank of the UAE today issued guidance outlining the risks arising from dealing with virtual assets and asset providers. The guidance comes as authorities in the country attempt to lure crypto outfits with friendly regimen. Now, you may think this is negative, but they've actually been praised by guys like Coinbase and a few other exchanges saying this is what the US needs to do. We need to have that framework so we know how to operate, right? Also, you have the Central Bank of Hong Kong and the UAE agreeing to cooperate on crypto regulations. They are exploring how to leverage each other's markets for the growth of the crypto sector, not banning it, not regulating it out of existence, regulating it so that they can have that cooperation between the two parties. And as Brian Armstrong said, if you don't know who he is the CEO of Coinbase. He had an op-ed and he's still continuing to battle. He hasn't left the US. They're still battling with the regulators here. And in his latest op-ed, he said that China could be a real threat to the US in the finance arms race, given their softening approach to crypto. Now, crypto transactions are technically still illegal in mainland China, but that could be changing. So obviously, the fact that they're just letting Hong Kong, now retail get involved, and plus they're saying that it was actually, this happened a couple days ago. The Chinese government released a white paper on Web3 outlining the country's plans for new internet technologies. Now, there's no specific mention of cryptocurrencies, but Web3, tokens, come on. It's kind of like saying it without saying it. So could China actually be looking to soften their approach? Very, very interesting. And if that's the case, would they outpace the US because we're not having a very good regulatory situation here? Bybit, right? They pulled out of the US, they pulled out of Canada, right? You can see right here after they said that they would consider it, nope, they shut down, which by the way, guys, again, if you want to trade on other platforms, I know it sucks for everyone that was using Bybit, but if you want a centralized platform, I do like BitGet. Personally, that's the one that I prefer. If you want, there is a tutorial popping up above, or if you want to do a decentralized exchange, I also have information on that below, and there's still over $56,000 in bonuses to anyone who wants to claim them. You know, all you got to do is deposit, do some trading, read all that stuff. But anyway, you've seen, Binance pull out, Bybit pull out, and this is the kicker. And I'm just going to get right to the story. Crazy. Now listen to this. Now, like I said, you could take this with a grain of salt. It could be a good thing. It could be a bad thing. I could see why some people may not like this, but traditional finance firms, including Standard Chartered, Nomura, and Charles Schwab, are busy building and funding new crypto exchanges and custody platforms. They're doing that right now in the background. These are going to compete with the Geminis and Coinbases and Krakens. Now, they're well-known Wall Street firms, and they're betting that fund managers are still interested in trading crypto even after last year's market meltdown and scandals. The FTX bankruptcy and Terra ecosystem implosion, among others, highlighted the risk of investing through largely unregulated exchanges. But legacy firms believe that asset managers prefer dealing with established players over crypto-native exchanges like Binance, etc. Now, check this out. You had the senior analyst at Global Digital Assets at Bernstein saying, the large pedigreed traditional institutional investors definitely prefer dealing with counterparties who they know have been in existence for years and have been regulated into the traditional sense. In a survey of 250 asset managers published by the Ernst Young's earlier this month, half of the respondents said that they would consider switching from a crypto native group to a traditional backed company if they offered the same services. Additionally, 90% of respondents trusted traditional financial groups to act as custodians for their crypto assets. Now, I am a firm believer that if you want to do crypto, the right way, you want to self-custody, you want to have your own wallet, that is literally why it was designed, so that you don't have to put it in the hands of these people. But what you're seeing is now these traditional finance firms and players who have been around and they're trusted, right? Trust the banks, trust these guys, I don't know. But nevertheless, unfortunately, the majority of the public still is worried. I mean, the SEC basically said that they're not going to, they're trying to basically scare people out of crypto. That's kind of what they're trying to do, right? They're trying to discourage people. So they say traditional financial firms are banking on their finance industry expertise, long-standing reputations, and lack of regulatory scrutiny to attract clients. The new wave of legacy-backed crypto platforms will compete with Coinbase, Binance, etc., which also will be willing to host institutional clients. It was also noted that BNY Mellon and Fidelity already operate separate crypto custody divisions, and NASDAQ is currently waiting for regulators to greenlight their services. The CEO of Laser Digital, a crypto trading firm owned by Nomura, said some crypto exchanges were not providing best execution or best prices. He added that the involvement of traditional firms in crypto would create more transparency and more convergence in pricing. So this is like really big news and no one's really talking about it right now. But the fact that you will potentially have these legacy players, right? Like Standard Chartered, Charles Schwab, getting involved in cryptocurrency, allowing institutions to gain access through their traditional banking relations and whatever. I think this is really huge. And while I don't agree that we should just send all our crypto to the bankers, right, or to these legacy guys, at the same time, unfortunately, there are still so many like hedge funds, institutions, family offices, sovereign people that are just scared to get involved in crypto if it's not through a traditional means, right? So we're in early, we got our DeFi wallets all set up and whatever, but the majority of these people, especially when you're dealing with other people's capital, they're gonna wanna deal with these types of institutions and institutional products. And I think this is just really, really massive. So finally, some kind of good news coming out of the US, right? It's not like these guys are running away saying, screw it, we're not touching it. They're actually saying, hey, maybe we should start building and funding our own Coinbase competitors. So let me know what you guys think about that below. I think this is a very underrated story. Of course, like I said, there's pros and cons. Do we really want these guys, sticking their hands in everything? Inevitably, if you want to play ball, in the major leagues in the US, that I just think that's how it's going to happen anyway. But anyway, ending on this note, abroad, crypto wallet as a service provider Magic has also raised $52 million in a strategic round funded by PayPal Ventures. So PayPal is also looking into this. Mass adoption of Web3 is a hot topic, and Magic is facilitating this with safe and simple solutions. Their wallet creation service allows company to reach millions of users on their apps and onboard customers who are new to Web3. So I know today's video was a little bit more positive than usual, right? We are going to hop in, of course, and just dive in super quick. So we are still holding above the 200 weekly moving average. That's down around 26,400. We did fall back below the 100 EMA 89 SMA. It's like I said, within a week, if we can get back above this and hold, you don't really want to fall too much below around 25,800. But of course, we do have this level down here for the retest where I did still say, even in yesterday's video, we had a perfect bounce. We started to move up, but I said, I still think there's a chance that we tag 25,300. If you are looking to trade that would be the area to potentially put in a long with, you could do a stop at around 23,600. And of course, get subscribed. I go over this all the time. Remember, if you want to take advantage of those links below, if you want to learn how to trade, there's tutorials, there's tons of bonuses below. But again, you can see the confluence on here at the $25,300 area. And as long as we maintain this upward sloping trend, I do remain bullish. Again, major macro trend still continuing to the upside. Worst case scenario, again, I don't think this is going to happen, but there's always somebody in the comments that's like, worst case scenario. Worst actual case scenario, Bitcoin comes down here and retests this major pivot at around $18,865. Do I think that's going to happen? Very, 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 very not likely in my opinion, but because people ask, that's a possibility. Everything, again, on these major indicators, though, is showing that we are exiting out of this bear market and we are beginning the early stages of a bull market. Obviously, it doesn't happen overnight. It doesn't just go up to $1 million overnight. But I do believe that we are exiting the bear market and transitioning into the early stages of the bull market. Of course, we still have this rejection over on the S&P. So if they do continue to stay correlated, then keep your eyes on the S&P. You don't really want the S&P to fall too far below around 41.55. So keep your eyes on that as well. A lot of these risk assets tend to trade. And again, for everyone who's been worried about their Ledger, Nano, and you want to switch to another one, I do recommend Engrave. They are a hardware wallet. And like I said, I'm going to be making a tutorial on this, showing you guys exactly how to use it. I just haven't had time with a lot of the relocating. You guys know what's been going on. So that's it for me. Thank you so much for coming back to the channel. You guys rock. You're the reason that I make these videos. Hope you're having an awesome day. I will see you tomorrow. Until next time, stay crypto. And of course, peace out.